Good morning, traders. It is Wednesday, the 8th of February, 2017. It's 8:03 Chicago time, 9:03 Eastern U.S. time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Overall, the news overnight is quite tame. The market position is bearish this morning coming in. Crude oil leading the pack down 1.13%, 1.13%. Let's see, with the Euro bond, gold, and the U.S. bond leading the markets today. Overall, Uh, it's been fairly quiet. The biggest news was crude oil yesterday, coming in with just a blockbuster surplus of 14.2 million. The weekly API oil inventories came in at 14.2 million surplus versus 5.8 million the prior week. That is 5 times bigger than expected. This is the third straight build, the largest build since February 2015, and the second largest build on record on crude oil. That's crude oil supply coming in much stronger. And you could see yesterday we gapped down in crude and traded lower on a somewhat of a trend day, and then we continue lower this morning. Just Monday, crude oil was trading. Crude oil opened at 53.60 or so. Currently, crude oil is trading 51.70, so $2 in 2 days. We're still trading March 2017 crude as the front month. So that's the big one there. And then other than that, a few stock items here and there, but nothing too serious. Obviously, you have your own news sources, and you can check that out. This morning, not much has come out. MBA mortgage applications for week ending February 3rd came in at plus 2.3% versus negative 3.2%. And then what's expected for today is crude inventories, the DOE crude inventories. The expectation is for 2.5 million surplus. Again, the overnight, yesterday's API came in much bigger than that. Distillate inventory is expecting 500,000 surplus, and gasoline inventory is expecting 1.5 million in surplus. Other than that, there's nothing else on deck with the releases. We have a 1 o'clock Eastern 10-year note auction for those who are trading the notes or spreads built on the notes. Let's make a quick move here and look at what we expected yesterday versus what we got. Now, the prior day, we moved from a rally up to to Monday. So Friday we moved into a rally up that went sideways. The rally up was built on the non-farm payrolls release. Very quiet trade Friday afternoon. And then yesterday or Monday, we came in and tested the prior day's close, which is right here, and then did a retest and dropped off. Incidentally, I did a webinar yesterday with for Futures IO called Understanding a Price Risk versus Information Risk, and I displayed yesterday Monday's trade. I think you'll be interested in looking at that. I showed how the trade materialized or how the plan was versus how the trade materialized in the during trading using order flow and the significance of not worrying too much about what price you take as long as it's in alignment with your plan with your intended bias. You might want to take a look at that. That's just a segue. The video for that's coming out today, probably from them. But yes, so we went and tested the prior day's close. Couldn't get to the prior day's point of control. That's Friday. Then we dropped and tested the low end of the range on Monday, Friday's range on Monday, and then yesterday we opened or we were trading around 22.92 at the time of the trader bites. So the natural thing to do here for the market is to test lower and bounce up, and that was our primary hypothesis. Okay, so that was the primary hypothesis going into yesterday. Um, and the idea was to push into new all-time highs. That did not happen. We're going to give that a big cross here. Let me change the color. We'll give that a big cross. Okay. Hypo 2 was the test higher. Hypo 2 was the test higher and then rotating down into the prior day's range, holding the value low right here and then going sideways. Okay. And that was the idea behind Hypo 2. This was dead on. This plan was dead on, and it worked as intended. And Hypo 3 was a test up and then failing to get the high, spurring sellers to come in, and then sellers come in aggressive and start filling the gap in that's down here. Okay. So that's the review of yesterday. I see that the video is breaking up. I'll post it when the time comes. Um, so here's what happened yesterday. Test up. We tested up just like we saw in Hypo 2, drop to the prior day's point of control. This is a huge opportunity right here. You have some confluence, the prior day's high, the current day's mid, the current day's VWAP, and you're below the OS high. This is a great opportunity right here for a 5 point rotation. And then we get the continuation move down to value low, which is the gray here. And then the market just goes sideways. So remember what the plan was for Hypo 2, up, up, down to the point of control, pull back. That's our mid test, push to value low, sideways. That was the pre-market plan versus the actual plan. Here it is, up, right? Double test, point of control, mid, push to value low, and then go sideways. So the idea is not to try to guess and have a crystal ball about what the market's going to do. The idea is to have a plan for when this happens. Okay. So that's the goal of these trader bites, is to come in with a plan as opposed to just coming in blind. Let's look at the overnight. Looks like my icons disappeared here. Let's see, where's my overnight chart? Overnight, 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 where are you? There we go. Nope, not that one. Overnight. Okay. So let's minimize that. The overnight session, we open right where we close. We push up. We have a double top, week high at the 91 quarter, and then the market tries again, 91 quarter, triple top, and then the market gives that up. The European markets are very weak this morning. They continue to push lows. The DAX continues to push lows. This looks very weak. And look at the line in the sand here. We've got multiple days of lows. If I can draw a straight line, let me see if I can get this straight here. Yes, perfect line. Um, Multiple lows. You see this support area here is getting weaker and weaker. Remember, the more times we tap on support, the more likely it is to break. So I'm looking for a push up on the open and then a break lower into the gap zone below here eventually today. So that's the key. That's the key area. Looks like YouTube is buffering right now. I apologize. I just cannot control that. So this is what we're looking at for today. The gap zone below starts at around 83 and a quarter. The mid of the gap is 81 and a half, and the top of the gap is 79.75, something like that. And that's what we're aiming for today on the primary hypothesis. So what is the plan for today? We are looking at how these last few days have traded. Monitor, maybe this isn't a very good color here. Let's do something bright. Let's do teal or cyan, whatever that color is. Not good with colors. So monitor how this has been moving. Let's back this up to Friday's So this is 2 days. You can see the point of control of this profile. It says it right here is 92. And as I move the profile forward, you can see that it has a fairly sharp point of control at the high, and that's the point of resistance that we've been trading against for the last couple of days. And we pushed through again yesterday. So we failed at it on Monday, and then we were above it yesterday. We opened right at it. We were above it. We tested it from above. It held, and then it broke through. So look at how this is behaving. This is the point of control. This black line right here. This is really important. We come up from below, fail, push lower. Then the next day we open right here. We push up, pull back. There's a test right there. There's a test right there. You see it? Then a failed high, corrective move. We break below. And then what do? We pull right back up to the point of control again, and we break away. Okay? And pull back, and then we end up going sideways to finish the day. Very, very orderly, very synchronized there. Now, if we push forward and include yesterday's trades, watch what happens. The point of control shifts down, and the old point of control becomes value high of this composite. You see how that happens there on this bar, on this 15-minute bar? The point of control shifts down, and what we have now is a double-pronged double distribution micro composite, which gives a lot of opportunities. When you have a double distribution, what you have is agreement, consensus on two prices with an MC point of control, MC a low volume node in between. This starts to act as the cutoff line, and if you put a line through here, you'll see that this area is behaving like a cutoff line. It's a little, I drew it a little high. I drew it at a slant here. But if you go through here and draw a line, you can see how this line is behaving here. And that's our most recent line of resistance, or the most immediate line of resistance. Right now, we have a weak low area right down here. Then we have a gap zone below, and we're attacking this today. So what is the conclusion? Can anybody guess here in this YouTube chat? Can anybody guess what the conclusion is likely to be for Hypo 1 here, given the stance that we're in? Remember, we have the point of control that shifted down, so now it's a high volume node. So this is an area of acceptance with a low volume node, and then we have a point of control, an MC point of control below us again. And so what we have here is two key areas of potential resistance, and it's likely to retest these areas up, and then it's likely to shift down, fill this gap zone, this dashed line here in the profile. There's no volume here. Fill this low volume area, which is the gap zone, and then that will be our target, right? Our target below that becomes 79.75. Initially, this is the top of the gap zone, 79.75 from Thursday, and that is your hypo 1 right there. Okay, the highest it's likely to push through would likely to be the yesterday's point of control, which is also the MC point of control. The backstop, the area that it needs to breach above there in order to be invalidated, in order for the lower distribution to be invalidated, it's 22.90. So your trade is around 22.88 to 22.88 half, with a 22.90 half or so area where you would be wrong. Okay, and then if that's the case, so now we have a two point risk, right? And if this works, and all of this energy that's built into this profile gets released to the downside, then your likely target is 2280. So we're talking 2288 if it gets up there to 2280. That's 8 points. That's plus 8 points if it does work, versus about a 2 to 2.5 point stop. Okay, so this is a legit setup here. I'm not saying it'll work. This may or may not work. There's a 50-50 chance here on the next trade working, but that is definitely a key and obvious hypo 1 for this morning. Okay, hypo 2, it attempts lower first. Okay, gets into the gap, hits the gap zone at 2181.50. and then finds its bids and becomes corrective and has a large rotation up. How does it become corrective? It attempts that low again and is unable to push through. Bids come in on the order flow. I use S5 Bookmap for that. Uh, you see the bids come in, light up white, right? And then it starts to push higher. And in that case, now your target becomes 2288, 2288. That would be the second hypothesis. This would be a failed test into the gap zone. The gap zone mid is again 81, 81.50. Okay? So that would be the area that support's likely to show up, and then we'll eventually finish closing the gap later on. That is the second setup of the day. So what am I watching for at the open? I'm watching for, does it test up and push up against the point of control? If it's pushing up against the point of control or it's testing higher, I'm pulling up my book map and I'm looking for large offers to be stacked on in the book, and the market pounding on those offers but not getting anywhere. Once the pounding ends, you're left with sellers. As buyers get done with their buying, as we see big dots come in and try to take that offer and collide with that offer, that once that gets exhausted, now you have all the buyers exhausting, you're left with sellers. That's when you hit the bid. I don't use limit orders to enter. That's when you hit the bid at any price, 2, 3 ticks down, it doesn't matter. You hit the bid, wait for it, and then let the weak longs then start the rotation, start becoming sellers, start the rotation lower, wait for a pullback, add some more, scale out, add some more, scale, and manage my theoretical average so that my theoretical average on the short is rising as the market is falling, and now I'm in a comfortable trade. Not a risk-free trade. It's not the market's money, but it's still a comfortable trade. Okay, and so that's a lot of detail. I know it's a ton of detail for just a trader bite, but this is you don't get these setups very often, and they're really something that should be expressed very loudly. I ask you to please take a moment and retweet this video to whomever you feel could use this type of information, this type of outlook on the market. I really advocate for a view of the auction rather than getting stuck with lines on your chart and mathematical averages and things like that. Just understand the auction and layer on whatever indicator you like best. Understand what the auction is trying to do, and that's what the Trader Bite is for. Good luck, and I'll catch you tomorrow. Take care.